Hey everyone, and welcome back to the channel. It is so good to have you here. Today, we're diving into something pretty exciting. We're gonna pull back the curtain on one of Asia's banking giants. You guessed it, United Overseas Bank, or as most of us know them, UOB. Now, they just dropped their latest financial report for the first half of 2025. And honestly, it's a fascinating story. On one hand, their operating profit is up, which is awesome. But on the other hand, their net profit actually dipped a tiny bit. So what's really going on here? Is UOB navigating these choppy economic waters like a total pro? Or are there some hidden details that we as investors should be paying attention to? Don't worry, we're gonna break it all down today, the good, the not so good, and what it all means for you. Let's get into it. All right, before we get into the fun stuff, let's just get the serious part out of the way really quick. This video is for informational purposes only. You know the drill. It is definitely not financial advice. Always do your own research or chat with a certified financial advisor before making any big investment moves. Okay, so who is UOB? Well, think of UOB as a titan in the banking world, with its home base right in Singapore. But they are so much more than that. They have a massive footprint all across Asia and even into Europe and North America. We're talking more than 470 offices spread across 19 different markets. And get this, they've been around since 1935. I mean, that's some serious history. So yeah, they're a cornerstone of the financial world over there. Now, let's be honest, it's a tricky time for all banks. The global economy is, well, it's a little wobbly. Interest rates are all over the place and the competition is fierce. For a bank, that means their main job, lending money to make money, is under a lot of pressure. So by looking at how a major player like UOB is doing, we get an incredible snapshot of the economic health of the entire region. And now for the part you've been waiting for, the numbers. Let's talk about the first half of 2025. So UOB reported an operating profit of 4 billion Singapore dollars. That's a really solid 3% jump from last year. And the driver for this? It was all about their fee income. You know, the money they make from all sorts of services beyond just basic lending. That part of the business was on fire. But here's the twist. The final net profit, the bottom line that everyone watches, came in at $2.8 billion. And that's actually a 3% decrease from the year before. So you're probably thinking, wait, what? Why the difference? Well, UOB was super clear about this. They're putting more money aside into a safety net. You can think of it like a rainy day fund. With the economy being so unpredictable, they're just being extra cautious. It's a smart move, but it does mean less profit on paper for right now. Now, if you own UOB shares, the earnings per share for the first half was $3.33. That's a small dip from $3.42 last year. But hold on, because there is some fantastic news for all you dividend lovers out there. The board announced a very nice interim dividend of 85 cents per share. And as if that wasn't enough, shareholders are also getting the second part of a special 50-cent dividend that was announced earlier. How great is that? So, where did the money really come from? Let's peel back the layers and look at the two main parts of their business: group retail banking and group wholesale banking. First up, group retail. This is the part of the bank for everyday customers, like you and me. And let me tell you, this segment was a total superstar. Its profit before tax shot up to 11% to $1.1 billion. This was all thanks to more people putting money into their savings accounts, and the bank just crushed it with wealth management and credit cards. In fact, their wealth management income alone grew by 15%. A very healthy 15%. Okay, now let's switch gears and talk about group wholesale banking. This is the side that works with big corporations and institutions. And, you know, things were a little tougher here. Their profit before tax actually down 12%. UOB said this was mostly because of lower interest rates and just tons of competition to lend to the best companies. But it wasn't all doom and gloom. Their investment banking team brought in record-breaking fees, and their treasury services income grew by double digits. What this really shows is a classic banking story, right? The super reliable retail side is helping to lift things up, while the more competitive corporate side weathers the storm. So, the big question, did they deliver on what the experts were predicting? Well, that second quarter net profit of about $1.34 billion, it was just a little bit below what analysts were hoping for. And it seems like that's been a trend for the big Singapore banks recently. So why the miss? It all comes down to one word: caution. UOB decided to stash away more cash in that rainy day fund than anyone expected. It's a conservative strategy, right? It protects the bank for the long haul, but it definitely puts a dent in the short-term profit numbers. And you don't have to take my word for it. Let's see what the CEO himself, Mr. Wee E. Chang, had to say. He basically said that the bank delivered a steady performance and that the core businesses are strong, especially with that great growth in fees. He made it clear that the bank's financial health is rock solid. He also zoomed out to the bigger picture, talking about how Southeast Asia, or ASEAN, is a real bright spot in the world right now. He's super confident in the region's long-term future. And honestly, that message just fits perfectly with the story the numbers are telling us. It's all about being steady and resilient with a laser focus on the future of the region, even if that means being a little bit careful today. So what's next? What's the game plan for the rest of 2025? Well, they've given us some pretty clear clues. First, they're expecting their full-year net interest margin, which is just a fancy way of saying how profitable their lending is, to be between 1.85 and 1.90%. That's a pretty tight range, which tells me they have a good handle on things. They're also forecasting low single-digit loan growth. Not super aggressive, but, it's realistic for this kind of economy. Now, here's a big one. They're expecting high single-digit growth in their fee income, and that is just excellent. It shows they are serious about diversifying how they make money. Plus, they plan to keep their operating expenses flat, which is great to see. It shows real discipline. And finally, they confirmed they're going to keep adding to that rainy day fund. So yes, the cautious strategy is here to stay. All of this points to a game plan of stable, balanced, and careful growth. So the million-dollar question, how did the market react? Well, after the news came out, UOB's stock price, it barely moved. It just went up a tiny bit. And that quiet reaction tells you that the market wasn't really surprised. The results were pretty much what everyone was bracing for. No bad shocks, but no huge party either. Analysts are kind of on the same page. A lot of them are rating the stock as a hold. The general feeling is that UOB is a solid, stable, and very reliable company, but it might not be the kind of stock that's going to double your money overnight. Okay, let's put on our investor hats for a minute and put this all together. What does this really mean for us? First, let's talk opportunities, because there are definitely some good ones. On the plus side, that amazing growth in fee income is a huge win. It shows UOB is a healthy, diversified business that can make money no matter what interest rates are doing. Another massive positive is their focus on the Asian region. I mean, let's be real. As the world changes, Southeast Asia is becoming a powerhouse for growth, and UOB is right there in the middle of all the action. Their recent move to buy Citigroup's consumer businesses in the area was a game changer. It's boosted their customer base to over 8.4 million people. That's huge. But of course, there are always challenges. The biggest headwind is that squeeze on their net interest margin. Lower rates just make it harder to earn a lot of profit from the core business of lending. The other thing to keep an eye on is that economic uncertainty the bank keeps mentioning. That rainy day fund, while super smart, does eat into today's profits. It's a trade-off, right? Short-term flash versus long-term stability. Their non-performing loan ratio, which is just a way to track bad loans, is stable at 1.6%, which is great, but their actions show that they are prepared for anything. So here's the bottom line. For an investor, UOB looks like a stable, a conservative, and a very reliable cornerstone for a portfolio. And hey, it pays a great dividend too. You're not buying a high-growth, risky startup here. You're investing in a well-managed institution with a rock-solid financial foundation, and a super clear plan for long-term growth in one of the most promising regions on the planet. That slightly lower profit, I see it as a sign of smart, cautious management, not a sign of a business in trouble. So, to wrap it all up, UOB's report shows a bank that is just navigating a really complex world with a very, very steady hand. The core business is strong, and that dividend is a really nice cherry on top. Now, I'm super curious to hear what you think. What's your take on UOB's performance? Are you bullish on the future of banking in Southeast Asia? Let me know in the comments below. I'd love to chat about it. And hey, if you found this breakdown helpful, it would mean the world to me if you hit that like button and, of course, subscribe to our channel so you don't miss our next deep dive. Thank you so much for hanging out with me today, and I will see you in the next one.